Joining us, much appreciated. So let's start with a sort of 101, really. With these futures contracts, you trade them every single day as a commodities house, but you're actually looking more often than not to take delivery of the oil, whereas perhaps a lot of the volatility in the last couple of days has been financial market speculators, which partly explains the problem we had. Is that right?
You've hit the nail on the head. Firstly, thank you very much for having me. You've just described, I think, the fundamental problem we had over the last couple of days. There's been a lot of non-physical market participants that are transacting in the prompt contract, which expired today, which was May WTI, and it's created a lot of noise. And in my opinion, the market has become a little bit disorderly because of this. Because you're spot on, there's only a small amount of people transacting on these contracts who actually intend to take or give delivery of the underlying crude oil in Cushing, Oklahoma, the contract's delivery point. So I think you've got it spot on.
And how unprecedented, Ben, therefore, is it to see a futures contract go negative? Is it unheard of, or have you seen it before such that it gives you some level of confidence the market might recover in the next couple of days now that contract has actually expired?
Gas markets, it's occurred, but in something as important as the crude oil contract, which is a massive commodity, I didn't really think it was possible. And I think a lot of the industry didn't even understand that it was plausible in this contract. I think what actually exacerbated the move yesterday was the realization of many market participants that your total loss could be worse than zero. People understand if you're buying a distressed asset, an equity or something, the worst price is going to be zero. I think it dawned on a lot of market participants sometime during the afternoon yesterday when the exchanges were explaining this, that we can trade negative, and we very quickly did, and we traded deep negative. It's not sustainable, but I think it caught a lot of people out.
It's not sustainable, but we are seeing all the front month, all the forward-looking contracts fall pretty sharply today, including June, which is getting hammered now down 12. I think it was at 10. So what stops this dynamic?
For now, it's difficult. I mean, the oil market was almost unsalvageable for April and May. I mean, we had demand destruction completely unprecedented, 30 million barrels a day, 35 million barrels a day of demand gone as everybody froze up and stopped moving all over the globe at the same time. I would have expected we might be looking a little better by June. The problem is there's a lot of length in that June contract and a lot of retail length. You guys mentioned the U.S. oil fund. They had a lot of length that is retail people trying to invest in what they perceive to be a cheap crude oil market. The problem with this is I don't think a lot of these investors understand contango and how it works and the cost of rolling those positions. And I think that's added to the volatility that we're seeing in the last few days. So June at $12.50, as I can see it here now. It can trade lower. It did trade roughly $6 lower earlier today. Do I think we will have sustained negative prices? No, because it solves the problem. People stop producing and people are incentivized to find somewhere else to put that oil.
Ben, there's one Singapore small commodities trading house that has filed for bankruptcy in the last couple of days, albeit some question marks over their financials, not just necessarily being on the wrong side of this trade. Outside of that, do you think there'll be some significant financial speculators that were long this contract that fell into negative territory that will be seriously crushed by the move we've seen in the last couple of days?
I think there was pain yesterday for people, and I think the moves were much larger than people's value at risk models would have suggested. If you realize that that May-June contract, the spread was minus $6 and settled at minus $58 yesterday, no one thought that was possible. So, yes, I think it's likely that there was a lot of distress in the market this morning when people came back in. For every contract, there's somebody on the other side. So undoubtedly, some people had a difficult time.
Yeah, I'm sort of wondering if you could expand on that a little bit about who are the big winners and who are the big losers here. It appears that the retail investors in some of these ETFs are getting hit pretty hard. Who else is left holding the bag and who benefits on such extreme moves?
I think the people that benefit are people with tankage and the ability to store on boats and so on. I think physical traders are doing their best to solve this problem by putting the barrels away that we don't have a use for now. So I would suggest people who saw the issue coming via seeing the huge demand destruction that was coming probably knew that contango needed to be deeper. I think the wet freight owners are doing very well as well. This is a group of people that have had a very difficult number of years as freight rates were low. Freight rates have spiked because people realize that these vessels that are normally used to transport the oil around the world will instead be used as tanks and they won't move. And they've done well. I think financial investors who didn't understand what they were doing over the last couple of days and didn't understand the risks they were taking by being long a contract for something that the world doesn't need more of at the moment are probably the losers. The contracts are anonymous. It's hard to see, but I'd suggest you'll see in the coming days and weeks who's had a difficult time.
Ben, I know it's hard to guess where the price is going to be in the short term, but if we look more medium to long term, where do you guys stand on expectations for how the industry looks in a year or two's time around the world? Will Saudi Arabia and Russia be licking their lips and celebrating taking huge market share off the US, or is that kind of story overdone a little bit?
Maybe overdone a bit. Look, we're very hopeful for the US shale industry. We're the largest exporter of US crude oil, and so these are our customers and people we know well. I think the market is going to have a hard time to perform very well in the short term. We've put down in excess of 1 billion barrels of stock, which is because we have contango in the market now. So any recovery, when we all get back out of this lockdown and can start moving again, will be difficult to spike because we have to draw through an immense amount of stock. I would say, though, that the sort of chronic underinvestment in large projects is only going to continue whilst we have these more tepid prices for crude oil and products. This may come back to bite us. It won't be soon, but in 18, 24 months, I think we can see prices decently higher than here. We just need to get through this lockdown. We need to get through this virus. We need to get back to work, to school, to what everybody was doing prior to this and start leading our normal lives, because the oil industry can't recover until people start doing that.